Today, we're going to take a closer look at 3 stocks that I like to consider toolbox investment stocks. And for those not familiar, this is one of my favorite investment styles. These are companies that not only provide one solution to a specific market, but actually have more than one tool or more than one solution where they have created more of a toolbox for a specific customer. And the reason I enjoy this style of investment is because it makes it a more sticky business. Even though a competitor might come out with a similar tool, it is going to be harder for a customer to kind of leave this toolbox to just pick up one specific tool. Like I've said before, I think it's a lot easier to throw away one tool instead of throwing away a whole toolbox. So for the 3 stocks, we're going to look at bearish cases, bullish cases, and their financials. If this is your first time here, make sure to hit the thumbs up, make sure to hit the subscribe button, check out the pinned comment for a lot of great links, and also my new tech channel where I post Mondays to Fridays. So let's get started. All right, so the first company we're going to take a closer look at is Autodesk, traded as ticker ADSK, and currently has a market cap of about $40.65 billion. I do want to say that 3 companies we're taking a closer look at today all kind of hit the software market, so we're going to see they have very strong margins. So for those not familiar with Autodesk, Autodesk is a software company that has created a software that helps you kind of design, build, and model different kinds of products. They're used in things like architecture, engineering, and construction. I mean, think about just building a hotel, for example, or some form of apartments. You need to build things like the sewage system, electric system, the air conditioning system, the floor planning, the kind of electric cables, everything else, elevators. So Autodesk kind of helps create that with the architecture, engineering, construction market. Next, we see the product design and manufacturing market. Here, I mean, anything, all types of technology needs to be developed somewhere, from how big the screen is to how the edges are. So that's very important. Next, in the media and entertainment, the software is kind of being used to kind of animate, render these kind of animations, films, and numerous kind of special effects. So they hit a lot of important markets. If we take a closer look at their most recent revenue, we can see their market grew year over year, which is pretty impressive. Their biggest market is the architecture, engineering, construction, rightfully so, right? This is a big market, and this is probably where a lot of money is being spent. One of my favorite markets is the media and entertainment segment. Right now, it's a very small portion of this company's total revenue, but it is the one growing at the fastest pace. And I do believe this is a pretty cool market with kind of things like the streaming war happening right now, gaming growth still improving, things like augmented reality, virtual reality, things like the metaverse. I do believe media and entertainment, that's why we're seeing strong growth at the moment, and it's one that in the next few years will also be a very important part of this business. So that, like I mentioned, this is a toolbox company, and here they kind of mentioned in Q1 update that they're growing their footprint beyond the design studio and into manufacturing in automotive to construct higher quality cars. And like I mentioned, this is that toolbox mentality where their tools is not only during one segment of the way, they're now being used in numerous parts of the kind of manufacturing of cars, which allows them to become a more sticky business. They've also really moved more into like a subscription services, and they continue to bring legacy customers into their subscription ecosystem, which overall improves their margins. And we're going to see their margins are already pretty impressive. If we take a quick look, their most recent quarter, they had about $422 million in free cash flow of about $1.17 billion in total revenue. In my opinion, those are some amazing margins, and they did give an outlook for the fiscal year of 2023. They believe billings will grow up to 18 to 21% year over year, which I think is pretty impressive. And look at that free cash flow of around $2 billion. Taking a quick look at financials, we can see this is a company trailing 12 months revenue continues to grow. They have a nice amount of debt, about $2.6 billion, but they are positive in cash flow, and they do have a nice amount of cash and short-term investments, which leads me to believe that, hey, this is a company that even though has a nice amount of debt, they are financially stable to continue, and it's not something I would worry about. If we take a closer look, their gross margins are about 90%, like I mentioned, software company, and their quarterly year-over-year revenue growth is around in the high teens levels, which I think is pretty impressive for a company that's already pretty big. If we continue to see, this is a stock that is down over 45% from its all-time highs right now, so I do believe it's one of those positions where you can kind of dollar cost average and kind of enter into this kind of great toolbox play. So right now, Autodesk is not one I would worry too much about, especially in the financial department. There's nothing that really scares me for Autodesk. I do want to say the biggest thing for Autodesk right now is the short-term macroeconomics, which might slow down maybe a few kind of future architecture or construction projects, which might slow down revenue a bit. Even though they did give us guidance that they still expect some strong kind of billing growth, I do want to say that could be some form of short-term risk. At the end of the day, I think Autodesk is pretty impressive, and it's one of those companies that's really well known in the engineering market, or in the architecture or construction market as well. All right, the second company we're going to take a closer look at is one of my favorite companies right now, and this is Unity Software, traded as ticker U. Right now, it has a market cap of about $10.9 billion. And personally, again, this is my personal opinion, I think this company sitting around $10 billion is an attractive price point. For those not familiar with Unity, this is a company that is being used, and let's just say Autodesk was being used to kind of model these kinds of real world projects. Unity kind of brings those models into life and they give them an action. So Unity and Autodesk actually work pretty well with each other. Unity's main product is their game engine. So if you are kind of designing a game, you're most likely using Unity or its competitor Unreal Engine. But Unity, we can find out why more than 50% of world video games are made in Unity. So this company definitely has a very strong market share. But this kind of real-time world rendering, it's not only used for games, right? Things like architecture, automotive, even film. So again, this is a lot of people try to believe that they are a competitor to Autodesk, but in my opinion, they're more like a great kind of bridge through the process. So Unity, they kind of help you create the game or kind of create your design with their create solutions, but they also have post-game creation. So let's say you want to add multiplayer, let's say you want to add replay or some form of voice command into your games, you're most likely using some of Unity's services. If you want to do things like industrial augmented reality, virtual reality, or some other forms of CAD and 3D visualization tools, Unity also has solutions for that. Creative workflows, game optimization, if you want to make sure that your games or whatever you created is running at the most efficient levels, they have machine learning agents to kind of help you out with that. So Unity, like I mentioned, a very strong toolbox. All right, so next let's take a closer look at their first quarter results. I do want to say Unity though, even though I am bullish, this is a company that comes with a little bit more risk that we're going to touch a little bit later with Unity, but at the end of the day, I am very bullish in this company. I mean, we can see the growth in customers that have generated more than $100,000 in the trailing 12 months has grown to 1,083 compared to 837 a year ago. Most recent revenue grew about 36%. And in the recent interview, management says that they do believe quarter four they will be non-GAAP profitable, which is pretty impressive. If we take a closer look, revenue continues to grow in trailing 12 months. They do have a nice amount of cash and short-term investments of $1.8 billion, but they also have about $1.7 billion in debt. This is a company that has made a few acquisitions to kind of increase that toolbox. Again, I do believe this is a very sticky business, and it's now that also is positive cash flow from operations if we take a closer look at trailing 12 months. If we take a closer look at gross profit margins, 70%, again, very high for a software company, but I do believe numbers could get better. The overall revenue growth in the past few quarters have been over 36%. Unfortunately, that's going to change, and I'm going to talk about that in some of the bearish points. But first, we can see this is a stock that is down over 81% from its all-time highs. Again, I do believe this kind of bearish market is giving us opportunities where in the next 5 years are going to make us extremely wealthy, and we're going to be happy to have purchased at these levels. So I do want to say with Unity, like I mentioned, a lot of risk, and one of the biggest risks right now is their revenue is in the short term is being impacted by some form of error that they had on their advertisement platform, and this is reducing the revenue growth. Management did mention that, hey, they are fixing this issue, but the risk comes, hey, if management is unable to fix the issue in the time frame that they have given, this can cause more of a bearish impact in the stock. This is one of the main reasons the stock price has kind of trickled down. At the end of the day, I do believe this is more short-term risk. In the long-term things, I think the biggest thing is their Unreal Engine competitor, which is getting a lot of news lately. At the end of the day, though, I do believe Unity is still strong, and a company I believe will be a great investment for me for the next few years. All right, so next we're going to take a closer look at Shopify, traded under the New York Stock Exchange as ticker SHOP or SHOP, currently with a market cap of around $44 billion. And the tools Shopify has kind of made are at a whole different level compared to its competitors, and I do believe this toolbox mentality works well for Shopify. So some of the solutions they have have is sell everywhere. You can use Shopify or one platform to sell products to anyone, anywhere. Also using things like point of sales through your website, social media, and online marketplaces. So again, great tool there. It helps you kind of market your business. They help you with analytics, with advertisement, and kind of digital marketing campaigns. The other one is they help you kind of manage everything. They do things like payment solutions, if you need finances, if you need shippings, if you need to manage inventory. So again, everything all in one platform. This company in their most recent quarter only grew 22%. And the reason I say only 22% is because in the past few quarters, in the past few years, this company has grown at strong digits. I don't know why. I think investors believe the growth story is done for Shopify, but I believe it's just starting off. If we take a closer look, stock price is down almost 80% from its all-time highs. Again, another company that I believe is sitting at super attractive levels that I am going to be super happy to be investing at these price points. If we take a closer look, revenue continues to grow trailing 12 months. They have a lot of cash and short-term investments, and they even have and they are even positive in cash flow from operations. The amount of cash that they have can pay off all the debt that they have and still have a nice amount left over. If we take a closer look, their gross profit margins are about 53%, and their revenue, like I mentioned, is still growing. Their most recent quarter was 22%, but we can see that growth over time. They definitely accelerated that growth in the past year due to COVID. So now things are slowing down, but I do believe this is a market that's going to continue to pick up. So let me know, what are some stocks that you believe fit well in the toolbox mentality kind of play? Out of these three stocks, I do own Unity and Shopify. There's no main reason that I don't own Autodesk. It's just I've never really had the funds to just continue to start a main position. But if prices keep dropping on that stock, it's just one that I might enter pretty soon. So I hope you guys enjoyed today's episode. Take care, have a good day, and see you next time.